Hello, good morning. How's the night? I'm fine, thank you. Sorry, give me a second. Hello, it's Israel Olaskomi Ademoroti, the CEO of Misfits Academy, and I'm on a call with Emmanuel, a potential tutor for a course that will be uploaded on Misfits Academy by the end of tomorrow. This course is a boom and crash strategy course that would be running on Misfit Academy as a course that stands on its own. So, Emmanuel, could you tell me what this strategy is about, please?
The benefit of it. So that's what this boom and crash has done. If you're able to harness the spikes, you can be able to get the benefits of the market. So the strategy is basically an order block based strategy, and um, it takes advantages of the imbalances that the price leaves behind. It is not complicated like the other strategies you can find online. It is not hard to spot. It is very easy to spot in the market. You just have to have the eye for it. And what are you looking out for when you're trading this strategy? You are only looking out for those imbalances, your order block, and the return to the order block. It sounds so easy, right? Sounds so good to be true, but it is just that way. It is just that way. But then there are other little things that you have to put into place, look at before marking out or getting these setups in the market. You have to have the knowledge of the market structure. You have to know what the market is doing, where the market is going, and how it is moving. So you have to have that knowledge of market structure. It is very, very important. And one key thing about this strategy is that I only take or you only take sell signals on this strategy. There are no buy signals for it. Only sell signals. I've backtested these strategies right from when boom and crash market started, right from 2019, I guess. So I've done like 5 years backtest on each of these pairs, on each of these three pairs. So it gives me that statistical advantage where I know that the strategy works. Another good thing about this strategy is that it gives you a very high risk to reward because it is structure based. And if you have an eye for the market, and if you've looked at the boom and crash market, specifically boom 500, 900, and 1000, you will notice that these markets they tend to trend. When they want to trend, they trend. Once the market is moving, it is moving. So it is that movement that I tend to catch. So if you can catch those moves in the market and also have this um, factor of patience, because that is what a lot of traders lack. Once you have that patience to wait for that strategy to form, put everything in place and like tick all the criteria that
Sorry, give me a
makes
second.
it work. Yeah.
Don't lack patience as a trader.
very important.
Thank you.
Yeah.
Thank
So
you.
you need that patience because your strategy might work. In fact, every strategy works in the market. That's just the honest truth. Every strategy works. But the only difference is some strategies
Sorry, I was about to get scared because you said your strategy might work.
no, I didn't say might. I didn't say might.
You did. You said might work.
I said every strategy work. Every strategy work. Support and resistance, order block, um, every strategy you can think of, Fibonacci, anything you can think of works in the market.
Fibonacci is an indicator, though, not a strategy.
People use it as a strategy.
Mm.
People use it as a strategy. People use it as.
So you just draw Fibonacci and use that as a sorry. You just draw your Fibon. Sorry, you just draw your Fibonacci and use it as a full strategy.
No. Not that I used as a strategy, but you would add it like if it's like it's like an ingredient to your strategy. So Fibonacci can be a major ingredient to someone else's strategy.
Sorry, so like an indicator to validate different confirmations in a strategy or series of strategies.
Exactly.
Are you sure?
Yes, why not? We come again with that question.
You can use Fibonacci as an indicator to your strategy or as a confirmation.
This very to my own strategy or to other strategies I'm
To you can say yours and to others, but primarily others.
You can use for mine.
Sorry,
Fibonacci is just
and also could you after this could you tell me how your strategy works, please, like in full? I'm sorry for interrupting you. Like what you said when you said that it might work got me a bit
I didn't maybe you didn't hear
alarmed.
me. I didn't say it's my work.
Well, you did correct yourself after you said that all strategies work, but you saying it might work. It's like, But then again, sometimes strategies might fail based on the amount of consistencies you are able to like concurrently observe in the market.
Well, based on what you just said now, let me clear the air. My strategy work. It works. I did not. Maybe you got me wrong. It works.
Yeah, sorry. Yes, we are only having this call because you sent me some screenshots in my DM and I was impressed.
Sure. So, and also coming down to strategies not working. Personally, I'll still come down to explaining how this boom and crash strategy works, but I would also like to touch on some things so that the student can get a feel of what they can get from the class potentially if it is something that is going to hold. Every strategy, like I said, work. But there are nuances that you have to look at before you start trading a strategy. You get some strategies are simple, some strategies are complicated, some strategies work on different market conditions. So when you're trading a strategy that only works when the market is ranging, you can't force that strategy to start working when the market is trending. So when the market starts trending, and you don't find your setup, anybody that does not trade that same strategy the way you trade it would say it does not work anymore. But it is only a function of the fact that the market is not in the condition that suits that strategy. I don't know if that makes sense. That's one part.
Sorry, so what, if I'm getting right, you are saying that the strategy only works when it meets the conditions that make sense in the market?
Every strategy works when they meet the criteria that make them work in the market. Does that make sense?
Yes.
So let me explain that. Let me come again. If you have a strategy that works based on trend lines and the market is not giving you trend lines for an extended period of time, and the market is just giving you break of structures and just falling and falling and falling for an extended period of time, it does not automatically mean that your strategy does not work. It just means that the market condition is not suitable for your trend line strategy. But when the market starts moving in trends, like moving in trends that give you trend line formations, you tend to get trend line setups. And in those moments, your setups will work. So if you force your strategy to work in a market condition that does not suit that strategy, it will definitely fail. Not that it will definitely fail, it will most likely fail. You might get, you might win some trade, but those wins are not legit wins based on your own strategy. They will look like luck and you win, but it would not be consistent, it will not be sustainable unless it is in line with the market conditions that suit that particular strategy. So this is just like a holistic look of it. So going back, I don't know if that clears the air or if you still want to ask me a question about surrounding that.
Yes, could you further elaborate, please,
On
on everything you've just said? So the summary of what I heard, sorry, is that every market strategy works in as much as they satisfy some conditions in the market. If they don't satisfy the conditions in the market, they will not work. But what about in some scenarios whereby they satisfy some conditions in the market and they don't work? Because I trade and sometimes I use a strategy that satisfies all the conditions in the market and it will still hit my stop loss.
that's a common is a common reality of traders. It's a common reality of traders. And if I'll be honest with you, that's the hardest pill to swallow as a trader. Because that is where your ego comes in as a trader. Um, Trading is not just about coming to the markets, drawing lines, and just looking to make quick cash. From my own perspective and from my own experience of trading is about you as a person, your personality, and what you are looking to get out of trading. If you're looking at trading like, let me just come to the market and look for $50 and go out. You can come to the market and look for that $50. You see it and you go out. But there's every chance that for every $50 you make, you will lose $500 if that is your mindset. Because you are not having the mindset that depicts a trader. Trading comes with a business mindset. It comes with structure. It comes with you knowing what to do at every point in time. So for you to call a strategy
Sorry,
strategy.
sorry to interrupt. What do you mean by for every $50 you want to make, you lose $500?
So what I mean by that is this: we all know the market. We all know how the market works. It's just like a newbie or somebody that does not know how to trade can just come into the market, fund $100. And the very first trade you place will be a very good trade and you make money. It happens to almost everybody. The first time I traded, the first time I funded my account, I funded $50. I funded out $50. And the first, I can't forget that trade. The first trade I took was based on a double top. And I took that trade and slept off. I woke up in the morning and my account was $350.
Sorry, from what to what?
From $50 to $350.
Nice.
My first trade, I'm not capping, my first trade. And it was based off of double top. So when I came to the market,
Sorry, and you did the analysis yourself.
I did the analysis myself.
Was it from this strategy?
No, that was like 4 years ago, not from this strategy. That was like me being a new person in Forex, just seeing YouTube videos of, okay, double top work. If it comes to this place, sell. If it comes to this place, once you see it comes to this zone, it taps 2 times, you just sell it from there. Once it crosses the neckline, I took that trade based on what I just saw on YouTube. And I made that trade and I was in profit. When I woke up, I was like, wow, just like that. Is it that easy? Guess what? The next 5 trades I took were losses and I blew the account. Why? Because I did not know what I was doing. I just took a trade and it worked. That was just what happened. The market was, I actually just rode a trend in the market and it was in my favor at that particular point in time.
I think every trader at some point has blown an account before.
Yes. So when it comes to trading strategy, it comes with a lot, and that's the honest truth. So you said something about placing a trade, and it follows your criterias and it meets all your criteria per se, but it comes back to take a stop loss. If you've traded for a very long time and you've had experience in markets, I guess you'll be familiar with saying that the market is very probabilistic. I don't know if you understand.
Market is fixed.
Probabilistic is a probability.
Oh, probability.
Yeah, it's a probability based market.
Not really. If you have a good strategy, it won't be probability.
Well, from my own experience, it is how it works. Why I say it is how it works is based on your own question, because your question is like my own, is a proof of what I'm saying. You can have everything right, but the market would always do what it wants to do. That is why you have a lot of things in the market. That's why you have support. That's why you have support and resistance. That's why you have demand and supply. That's why you have Fibonacci levels. Excuse me. That's why you have channels. That's why you have what will I call it? Other blocks and all of that. So the market moves. There's a way the market moves, and the way the market moves, it moves in such a way that it carries every strategy along. I don't know if you understand. For example, if the market is moving in a trend, there's every tendency that if I'm trading an order block trading strategy, I will see a sell or a buy in this. Okay, let me take for example a sell. I will see a sell in this market based on an order block trading strategy. And I'll see someone that's trading a trend line strategy. The same person will see that same sell, but not from my own eye of order block. Another person trading price action per se by trading support and resistance might also see that same sell, but not from the eye of order block or trend lines. I don't know if that makes sense to you.
Mm.
Okay, so it means that different persons can see a particular thing in the market, but from different eyes. And this is what makes trading and the market what it is. And this is what creates that loop or that difference in everything. So the market might favor people trading trend lines at a particular point and then use people trading other blocks as liquidity in the market. Sometimes it will favor people trading other blocks. And at that point, anybody trading trend line, it will use your trend line as a liquidity for people trading other blocks. It might favor people trading other blocks, but at that time, it will use people trading support and resistance as liquidity. So you see that at every point in time, in the market would always do what it wants to do.
So what you're saying is that, or what this is meaning is that, if you're trying to learn properly and trade properly, you need to learn more than one strategy so that you can use various strategies as a confirmation to the one strategy you're using to know if your entry is a good entry or a bad entry.
No.
Okay.
But what I'm trying to say is this: instead of learning every strategy or learning all the strategy or learning all the strategies, learn one strategy, master it to the core, stick to it, learn every nuances around it, and by so doing, you would reduce the risk of losing a lot to the barest minimum, where you can actually maximize your win.
Okay, sorry, but you just said now that you can enter the market and then it will favor a person using price action more than it will favor a person using, in quotes, Fibonacci, more than it will favor a person using like another different strategy. So I thought that would now mean that when you learn all these strategies, you can apply everything together as different confirmations so that you can know if your entry, your buy entry, your sell entry is a very good entry after you've used all these strategies as confirmation compared to when you learn just one strategy. And even if you know all the intricacies of the strategy, it is still just one strategy that you know. And let's say it gives you a proper buy or you see a good buy entry from using a strategy, and then at the end of the day it doesn't favor, let's say I use price action and then I see good buy entry, but it doesn't favor my trend wave strategy, or it doesn't favor my, let's say, demand and supply strategy, or different other let's say ICT, I use ICT to trade and it doesn't favor ICT, but it favors my my price action. Wouldn't that mean that even if I know how to use price action to trade, I will still like hit stop loss and lose money compared to, let us say, I learn all these strategies. If I actually learn all these strategies, I will be able to use all these strategies as multiple confirmations before I enter a buy entry or I enter a sell order, or like a different position, like different orders or different executions in the market, yeah. Because it doesn't have to be like an actual buy, it can be a buy, stop, or you know what I mean.
Okay.
I hope you know
So
what I mean if you're watching this, and if you don't, subscribe to the channel so you can understand.
all right. So I would explain, or I would answer that question like this. It is okay to learn everything about strategy. It is okay to learn support and resistance. It is okay to learn order blocks. It is okay to learn trend lines. It is okay to learn price action. It is okay to learn every strategy, not like every strategy, but it is okay to lay your hands and have an idea on everything you can find on the market. It is okay to have an idea about them all. But the most important thing is doubling down on one and knowing it to the extreme detail. So now you're asking, if you know all the strategy, does it mean that you use this as a confirmation? If I am trading an order block strategy, now it means that, and I have an idea about trend lines, it's it means that when I'm trading my order block, I would be looking at the market from the eye of an order block trader. So if I'm seeing a trend line, if I'm seeing a support or
Sorry,
resistance.
give me a second. What is order block and how does the strategy work?
Okay, basically from the knowledge that is out there, order blocks are like, it's a zone in the market where you have um residue orders, and you can identify it as like the, if you are in an uptrend, the order block there is the last bullish candle before a very impulsive red candle. Or if you're in a downtrend, you can call it the last bearish candle before a very impulsive green candle. There is this misconception, this difference. There's a difference between order blocks and supply and demand level.
Okay.
Demand and supply levels do not necessarily
Sorry. Give me
require.
a second. So, quick one. On our Forex Masterclass course on the website, if you want to learn order block properly, you should check out the course. It's in our full masterclass course.
Yeah.
Okay.
So as I was saying, the other blocks are like where price tends to give you a push before a move. If you're in an uptrend, that last green candle before you see big red moves. If you're in a downtrend, that last red candle before you see those big green candles, that is your particular order block, and your order block comes as a single candle.
Sorry, before you continue, you learned forex from us, yeah?
Yeah, I started my trading journey on Misfits.
Okay, good. Because I like the explanation of other blocks.
So it was a good experience as well.
Thank you very much.
So um so that's that. But other blocks is a very elaborate topic if you come into the other block world. Because personally I've come based on the strategy that would put on the Misfit Academy and would also put on the masterclass. The other block, can you hear me?
Mm-hmm.
Hello?
I'm listening.
Okay. The other block is a word on its own. We have different types of other block, and we have different candles when it comes to other block. And I've come to realize that different types of candles that depict other block tend to give different levels of um, um, probability. So you might find this candle that will give you a high probability trade. You might find this candle that does not really hold when you take a trade. You might also find another candle that is just there. So there are different types. When it comes to other block trading, you have to know the type of candles that you trade with respect to other blocks. When I'm trading other blocks, there are some candles I see and I do not pay attention to them, even though they meet all the criteria of being an other block. But there's a particular candle I will see and I'll be like, okay, this candle, I've seen it give me good trades over time. So I trust it more than other candles, if that makes sense to people that trade a lot. So trading comes with that little experience. It doesn't come with just you seeing the chart and okay, this is what I do. It comes with having the experience of doing something over and over and over and over and over again, to the extent that you now have this natural instinct of knowing to an extent, not that you really know, but knowing to an extent what price could do at a certain point in time with respect to what you're doing.
Sorry, what do you mean by know to an extent, not really know?
They said,
What do you mean by know to an extent, but not really know?
so what I mean by know to an extent and not really know is because the market is the market. We don't own the market. The same way you're trading is the same way millions, or should I say billions, millions of people are trading. And the whole of us are the people that are involved in what the price is doing. So you cannot really know what the price is doing, but you can use data and um, backtesting, backtesting data to have a clue of what the market can do. In the sense that, let me give you a very simple example. If you take, there was this thing I did last year when I started trading this particular strategy. I did an exercise of trading um, 21 sets of trades 7 times. I took 21 trades 7 times with a particular strategy. With this particular strategy, that is about 150 something trades. And I recorded everything, like recorded the entry, the exits, the order block type, and how the entry looks like. I did it for 150 plus trades. I did not skip one. And if I woke up and I skipped a trade that met the criteria of my setup, I will record it and just mark it as a trade I missed. But it gave me data about what I'm looking for. So looking at someone that has taken that number of trades, which is not even as much as I would want to, but taking 150 something trades gives you a data set of what you can look at and um, what you can expect from the market. From doing that exercise, it opened my eyes to see a lot of things because I got to understand how the market moves, especially on the boom market, boom 500, boom 900, boom 1000. I got to see how price reacted to different other blocks. I got to see how price reacted to areas of interest. I got to see how price move. So doing this over time made me refine the strategy, or should I say refine the edge to the extent that I have 80% knowledge of what price is doing. Because nobody can actually know that okay, price is going to do it. You can know that price is going to do this, but you would not know when it is going to do it. You can know what price will do, but when it is going to do it, you don't know. But having a structure around what you do is what eliminates that factor of not knowing. If you have a structure around your strategy, it eliminates that factor of not knowing. So you have that 80% of knowing what you are looking for. Then your structure takes takes care of the remaining 20% of that not knowing. I don't know if that makes sense.
Yeah, actually.
So um,
But I asked the question earlier though
what was the question?
that you said, how do you know when you don't? You said, I can't really remember how.
You said, how do you know? How do you know when you're right?
Mm-mm. You said you might not know when you're right all the time, but I mean, you've given a good explanation to it.